Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hello and welcome to How I Raised It. Today's episode, I have Sergio Villasenor of Elliot. Hello, Sergio.
How you doing, Nathan?
I'm great. Glad to hear your trip to New York is going well. Do you live in New York or are you just visiting?
I live in San Francisco, so just visiting. We have a bunch of demos tomorrow, so mixed batch of meetings, right? Like demos, investors, so that's why we're here.
Awesome, good deal. Well, your funding story is unique. You have investors in New York and San Francisco. We're going to get into that in just a minute, but why don't we just start off? Why don't you tell me what is Elliot and why did you start this business?
Gotcha. Elliot's a software that helps retail brands sell easily across the globe. So really what Elliot does is simplifies global commerce. And how we do that is provide kind of a centralized solution that allows brands to sell to anyone, anywhere, and at any time. So if you sell in the US on a .com, if you sell on China in a marketplace, if you want to go into new markets like Southeast Asia or Latin America, we provide you the tool to do it, as well as the tool that takes care of all those different nuances that come with selling globally, like logistics and freight forwarding and translations. Elliot is really the central kind of source of truth for retail brands that want to expand globally.
Central source of truth. I like that. So let's see. Tell me about, you recently closed was it a Series A or was it a seed round?
It was just a seed round. Yep, a seed round.
It was a seed round, but you had two VC firms. Why don't you tell us about the round? Give us the size of the round and who's involved.
Sure. So it was a $3 million seed round. We did have two co-leads. So Bowery Capital, based in New York, as well as Sousa Ventures out of the Bay Area. And then we had multiple participants. Accelerprise, which was actually the incubator that we came out of, BAM Ventures in Los Angeles, Flexport as a company, and then SP Angel.
Awesome. And was this the first round you raised, or you raised an angel round prior to this, correct?
That's correct. Yeah, we did kind of like a pre-seed angel round, really leading into the same time we were kicking off our discussions with VCs, and that went really well. So we did a pre-seed before the seed.
And how much was that?
In total, it was $718K that we did. So we've raised $3.7 million to date.
Okay, so let's go start with that one. We'll kind of go in chronological order. The company's very new, and so tell us about raising that angel round or pre-seed round, whatever you're calling it, with a brand new company. Give us the story.
Sure. Yeah. I mean, in all honesty, the story is kind of crazy. I mean, Elliot as a company didn't get started until August of 2017, so relatively new, commercially available for less than 8 months. And really, we didn't kick off like 100% focus on Elliot until July of last year. It was really a pet project of my agency, so I came into this industry as a consultant, really just solving these problems in a one-off manner, and then got found by Mike Cardamone at Accelerprise and entered an enterprise SaaS-focused incubator in San Francisco. At that time, things progressed really fast. The accelerator quickly noticed that we weren't like most startups that didn't have a baked product. We were literally like go live ready when we got there. So we immediately started to do angel rounds, and we kicked that off about midway through our accelerator program.
And so the accelerator started in July. Is that correct?
July 17th, correct.
So you let's take a snapshot of the company at that time. You had a product, it was already in the market doing sales, but you'd only been working on this product for several months. And what kind of revenue run rate did you have when you were kicking off your pre-seed round? I guess let's use the right terms here.
Yeah, for sure. So yeah, we did have the product ready. We became commercially available in August. And by the time we did our seed round or pre-seed round, we were at about 62K in MRR.
That's amazing.
And yes, it was, again, it was just me. I am a single founder. So we didn't actually hire until after demo day at Accelerprise. And then once we kind of really closed the seed round, we made the official announcement of all the new hires coming on.
So you mentioned this when we spoke earlier. You pitched about 27 angels and closed 26 of them.
Yeah, it was crazy, and really the one that didn't get in was he just failed to sign his DocuSign in time, and really that was what prevented it from being 27 of 27. But I mean, the individuals involved in that angel round. I mean, I'm incredibly not just like humbled and appreciative, but also flattered at just the amount of talented professionals that were in it. From Ryan Peterson being the CEO at Flexport to women like Karen Appleton Page, who was like first hire at Box, head of BD at Apple. So extremely flattered for who we were able to bring together. And really those people are what really was the catalyst for us having a successful seed round.
So, your story, which is awesome, is pretty atypical from a lot of startups. A lot of startups struggle, and it's a slog to raise money. How did you identify Ryan and Karen, and how did you build that target list? Because your dart throwing ability is spot on. It sounds like. How did you build that target list?
When we first entered Accelerprise, Mike Cardamone and Whitney Sales there, they both do a really great job of providing you access to mentors and executives within their networks. They bring them in, they make the introductions, and really, I did some homework. I was like, okay, if I had really great people involved in the company that I could say I would really want to work with them, like who would those people be? And I asked Mike, I'm like, I would love to get introduced to Ryan, for example, and he made the introduction, and Ryan and I had a very aligned vision in terms of global commerce, so it was a pretty good match. And Karen, for example, I met through the Accelerprise program, so I was very fortunate to go to a program that had a really great platform for me to maximize.
Not to take away your own hustle and initiative, but it sounds like Accelerprise was fundamental to raising this pre-seed round. Do you think you could have raised this without their help, or were they really the key? And this is not a sales pitch for them. I don't know them. I'm just trying to probe. Yeah.
No, I was a single founder, first time like product guy. Like I've never built a product. I've never built a software company. So, I went there knowing nothing. So had I not gone there, I can't say that I would have raised it, because I don't think I would have been in the proper mind space to be thinking of the things that they were already instilling in me. So from an enterprise SaaS standpoint, we did select them as our incubator accelerator because they did have that focus, and we knew that we were going to have a very enterprise, big company, large company type of buyer.
Did you get any of those 26 approach you at demo day, or was it all more networking throughout the course of the program?
So the angel round was done weeks before the demo day even started.
Okay, gotcha. Very interesting.
Yes. We were able to get that done, and really just because it really primed the seed round. Like, when people back channeled, there was already momentum there. There was social proof there. There were people in the Bay Area already talking about our company. So when people did their due diligence, it was much easier because, like, okay, like my partner at this other firm, or like my friend or someone like within my portfolio is already invested in Elliot. So it made it a lot easier when we actually walked into an institution.
Really cool. All right, let's go to the seed round now. Go beyond the pre-seed round to the seed round.
Sure.
And you had, is it just the two venture firms that came in, Sousa and Bowery, or were there other investors coming in that as well?
Yeah, we had a really great syndicate of investors. So Bowery Capital and Sousa Ventures co-led the round. Accelerprise participated, BAM Ventures out of Los Angeles participated, Flexport, as well as SB Angel.
When they co-lead a round, who's actually setting the terms? Or do they, usually I'm familiar with the lead and follow, venture follow-on. I'm not so familiar with the co-lead.
Gotcha. Sousa actually set the terms. So we were only going to raise about 1.5. The round got pushed up to 3 million when it was all said and done. So Leo was the main partner that we had worked with from Sousa Ventures. He set the term sheets. Bowery came on a little later and just committed more than Sousa, so that's where the co-lead came in. But Leo and Sousa Ventures set the terms.
That's interesting. I've met Leo. He's a nice guy. He's a smart one.
When you're like, first second engineer at Google and LinkedIn, and then he had a really great track record as an engineer, and he's been so like founder friendly, right? Like, and he's so proactive. I mean, the limited time that I've spent with the entire Sousa team has been really like amazing because they go really above and beyond. I mean, you can message those guys and women on the team at like 2 a.m. and they'll get back to you.
That's or someone. Maybe it's not Leo. No, I'm kidding. He's got like a bot.
I've had conversations with Leo at like 3, 4 a.m.
That's funny. That's great. So tell us about that round. So how many venture firms did you talk to, or how many investors did you talk to in that round, and what was your hit rate like, and how did you end up with those two firms?
Gotcha. I mean, we talked to between 20 and 30 actual institutions, and then coming, you kind of understand the space. So when you talk to that many people, it's not just like you're talking to one person. You talk to one partner, then you get introduced to all partners. So there was literally so many meetings. I think for like 2 or 3 weeks, it was literally 9 a.m. to 9 p.m. nothing but VC meetings.
Interesting.
And then I ended up deciding on both Bowery and Sousa, just given the expertise and the network that was very overlapping. I mean, when you look at Sousa's portfolio, they've actually invested in Acceleprise companies, so I was able to kind of cross-reference with other founders that had come through Acceleprise as to how they engage you post-raise. And then also, Flexport being in their portfolio and having a close tie to Ryan via his angel investment, and then Flexport eventually investing as well. And then Bowery Capital, we met them a little later, but really struck a really good chord with Lauren, who was the first associate that we had met. And then eventually, speaking with Mike and the team, and their strategic positioning in New York and their background and network was really a strategic and well-chosen player to be in the round.
Yeah, that's interesting. When talking to that many venture firms, which I think is a pretty normal number of firms, were you able to get some kind of competitive situation going, or how did you kind of light those fires? Because if you can get that to happen, you get a lot of leverage, and you can often kind of control the round. Maybe touch on that.
How do I say it? It was competitive. I didn't expect to take as many meetings as I did. Again, I was first time founder, first time doing this, came in blind, really not knowing what to expect. Going into it, when we came out of Angel, going into demo day, I really knew who I wanted as a part of the syndicate. Or maybe just not the whole syndicate, but certain players. And then, just like eventually took them, and it was competitive. I mean, we had offers for like the full 3, or someone would be like, we'll give you 8 at whatever valuation you want. And a lot of hard decisions were made because it was like, do you overvalue your company? But what's the ramification of that? Then you have to, exceed a certain threshold on A, and then you put your company under this kind of duress, kind of, closed deals kind of environment that becomes stressful.
Yeah, no, for sure. How long did the entire process take for the seed round?
About a month and a half.
Pretty much going full time, like you said, all day long on it, right?
This is what people didn't know about the seed round. So when we were actually finalizing it all, getting it all done, we were traveling. Like, we had, e-commerce roadshows towards the end of the year, like Shop Talk in Copenhagen. We went to Slush in Finland. Then we were in London twice at the same time, New York, I think for about, we did all that while traveling, doing roadshows, taking demos, onboarding customers, and then also, prospecting hires, because, when we kind of announced our seed raise, all those hires had already kind of been on already. So all this was kind of going on all at the same time.
It sounds exhausting, but it also sounds like I like this sort of insightful stuff, because it's like it tells other first-time founders what it really takes to raise. It's
Oh yeah, because I mean, outsiders looking in, they're like, "Oh, you did it so easy," and I'm like, "You don't understand the stress I was under. It was crazy." And and in the day, you just have to make sure your product works. So it's like, how do you balance all that? How do you just kind of look yourself in the mirror and say, "Hey, I just got to get this done."
Yeah.
And at the end of it, it's like, okay, we got past that milestone, so on to new obstacles to conquer.
So let's touch on that a bit. Actually, before we touch on that, if you're willing to share, what were your metrics like at the seed round, just to set a kind of bar? Mm-hmm.
Yeah. At demo day, we were at 62K in signed. We were close to 100K in ARR when you considered our LOIs at the time. So we had 3 outstanding LOIs, 2 of which have since closed. One of which was a publicly traded company like Crocs, who we actually even stole business from our competitors. So it was already a really great customer to have on, and they're a globally recognized brand as well.
Yeah, no, they're great. So 62K MRR, you said, was that?
That's correct. Yep.
Yeah.
And then about close to 100K with signed LOIs, 2 of which had since closed.
Gotcha. So next steps, when do you anticipate raising a proper Series A, and how long do you have? What's your
Our run rate right now with where we're at, even assuming that we lost every customer we had, is about 36 months.
Oh.
So we have a pretty long runway. We don't have a significant amount of burn contributed to the product anymore. And then our marketing spend isn't high as well. So we don't really do paid search. We have a very targeted ideal customer profile who we know really well, given that everyone in the team is really industry experts, has been in the commerce, retail, e-commerce, or like global marketing kind of space for the last decade or two individually. So to your question about, when do we start thinking about Series A? I mean, it's something that I've already been bombarded with like a week after just announcing the seed round. If I look at metrics that we're going to hit, we just came out of Denver for our first kind of team summit, and we kind of all agreed on like, hey, like this year, let's do, 5 to 6 million in run. And if we can hit that number, I think by October, that puts us in a really good position to really say, hey, we've done a really great job bringing on additional customers. We've done a really great job bringing on additional team members that can move the needle, and we've actually scaled this company. I mean, now we're a team of 21, which is just crazy. But I think those are the metrics and the key KPIs that are going to say, like, okay, let's do it.
That's exciting. I know you just finished your seed round, so it might be hard to look in the crystal ball, but do you anticipate raising multiple rounds? Is this a business that's going to take Series D and E rounds to get going, or what do you think?
I mean, we can talk all day about like triggers and when it makes sense. I mean, in the end of the day, we could be a private company. We may not do an A, just because, we work in data. We have a 92% plus margin. There's no overhead outside of just, the standard expenses like employee payroll, small leases on office space, but we don't really have anything that cuts into our margin. So I don't see it going past C if we just take the traditional, seed A, B, C. And then, eventually either be a really large private company or hopefully one day IPO.
Yeah, that's cool. Do you have competitors in the rearview mirror and are they raising money, or have they raised money? Is that in your brain at all?
Yeah, there's definitely competitors in the entire international space. When you look at commerce, e-commerce, right? In e-commerce, everything international kind of gets clumped into one category, even though we don't directly compete. So you have some of the incumbents that we're already starting to win business from. You have those kind of newer technologies that, like a Flow.io that was backed by like Forerunner, who we kind of get referenced to, and they have raised money. But we're competing directly with them. We know we're winning customers from them, and that's a testament not just to what we've created, but the people involved. Because for a company to invest, switch software, it's like you really believe in it, especially if this company is only 6 months old.
Yeah, it's amazing. Okay, last question. I'll let you get back to building the business. But what one piece of advice would you give yourself, if you could rewind the clock 6 months from now when you're just starting to raise money, or that would be applicable to other founders just starting out?
Number one, always trust your gut instincts. you're never going to have the right answer. So expect to fail. Like if anything, fail fast, make decisions fast. Making decisions fast doesn't always yield the right outcome, but it allows you to progress and just continuously evolve and get better. And then I would say get an executive coach at some point that can really help guide you. And look for someone that's operational or has a lot of sales experience in SaaS. Look at Series B2C companies. That's something that I would really recommend.
Where did you find a coach? How do you find a coach?
So there was a number of individuals that I had met through I just really liked. They were at companies that I really respected, or themselves were just acclaimed, and I just was like, wow, I can like potentially have this as an advisor or a mentor that can help guide me. So I found ours through Accelerprise, and they came through with kind of like that round table mentorship type stuff.
Gotcha. Very good. Well, Sergio, I appreciate your time. This has been great. Lots of good nuggets, and I look forward to hearing the next bit of success out of Elliot. So congratulations.
No, for sure. We definitely, and thank you. I'll kind of give you, I'll do it. What's that called? I'll give you some insight. We have a really good press release coming out with some really great new hires. So look for that to come out in about the next month. We're really excited to announce them.
Excellent. Very good. Well, onward and upward, my friend.
Sounds great, Nathan. See you.
Cheers.
Cheers, man.